Have you ever wondered how the super rich seem to get richer while paying minimal taxes? Welcome to a world where money flows like rivers, yet the taxman's share is but a mere trickle. A world where the super rich, those with wealth beyond most people's wildest dreams, navigate the labyrinth of tax laws with an ease that would make a seasoned explorer envious. A world where the super rich, those with wealth beyond most people's wildest dreams, navigate the labyrinth of tax laws with an ease that would make a seasoned explorer envious. And how do they do this? Through a series of secret tactics that are as complex as they are effective. You see, understanding these tactics isn't just a matter of curiosity, it's a matter of fairness. It's about understanding how the system works not only for those at the very top, but for all of us. It's about being informed because knowledge, after all, is power. So buckle up, because we're about to dive deep into the secret world of the super rich's tax strategies. Stick around to find out how the world's wealthiest people manage their taxes in ways you'd never imagine. Ever heard of the term offshore accounts and wondered what it actually means? Well, let's dive in to unravel this financial enigma. Offshore accounts, in the simplest terms, are bank accounts held in a country other than one's home country. Typically, these are located in places known as tax havens, countries with very low or even zero tax rates. Now you may be wondering, why would anyone go to the trouble of setting up a bank account in another country? The answer lies in two key benefits: privacy and, yep, you guessed it, lower tax rates. Let's start with privacy. Many of these offshore havens have laws that protect the identities of account holders. This means that the super rich can store their wealth away from prying eyes, whether that's the media, potential litigants, or even their own governments. Moving on to the second benefit, lower tax rates. This is where the art of offshore accounts really shines. You see, many countries tax their citizens based on worldwide income. This means that even if you earn money in another country, you still have to pay taxes on it at home. But by keeping their money in an offshore account, the super rich can take advantage of the lower tax rates offered by these tax havens. Now, it's important to note that there's nothing inherently illegal about offshore accounts. They can be used for perfectly legitimate purposes, like international business transactions or asset protection. However, they can also be exploited to avoid paying one's fair share of taxes, which is why they've become a preferred method for the super rich to minimize their tax liabilities. So there you have it. Offshore accounts offer a tantalizing mix of secrecy and savings, a potent cocktail for those with wealth to protect. They're a key part of the global financial system, yet remain shrouded in mystery for many of us, but now you're in on the secret. Offshore accounts, the first secret in the tax playbook of the super rich. Shell companies and trust funds, they sound complex, don't they? Well, they may seem a little intricate, but they're really just tools in the financial toolbox of the super rich. Let's unravel these two concepts. Shell companies are essentially businesses that exist only on paper. They don't have any active operations or significant assets. They're like empty shells, hence the name, but don't let their simplicity fool you. These entities can serve a variety of purposes, including tax reduction. By transferring money and assets into these companies, the super rich can effectively lower their tax liabilities. The transferred assets, though technically belonging to the shell company, are still under the control of the original owners. It's a clever way to make money disappear, at least in the eyes of tax authorities. Trust funds, on the other hand, are legal entities that hold and manage assets on behalf of others. When the super rich transfer their assets into a trust fund, they're essentially giving up ownership. However, they can still control how these assets are managed and distributed, often through appointed trustees. This way, they can enjoy the benefits of their wealth without officially owning it, thereby reducing their taxable income. But it's not all about tax evasion. Shell companies and trust funds can also be used to hide income and assets. By transferring wealth into these entities, the super rich can conceal their true financial status. This can be particularly useful in litigation, divorce proceedings, or other situations where asset disclosure is required. However, it's important to remember that while these tactics can be used for nefarious purposes, they're not inherently illegal. In fact, they're often used for legitimate business purposes, such as protecting assets from creditors or managing family wealth. But like any tool, they can be misused. So there you have it. Shell companies and trust funds, another trick up the sleeve of the super rich. Well, what if I told you that some of the world's most beautiful and exotic places are also tax havens for the super rich? Well, it's true. These tax havens, often located in picturesque locations such as the Caribbean or the Swiss Alps, offer low or even zero tax rates. But what's the catch? Let's start with the basics. A tax haven is a country or a jurisdiction that provides financial benefits such as low tax rates and sometimes near total secrecy. This combination attracts the super rich who wish to minimize their tax obligations and safeguard their fortunes. Imagine you've got a treasure chest filled with gold. Would you prefer to keep it in a place where others can take a large chunk of it, or in a place where it's safe, secure, and all yours? That's essentially what tax havens offer. A secure place to store wealth with little to no tax obligations. Now let's talk about the legal loopholes. These are not illicit activities, but rather intricate strategies that are often perfectly legal, thanks to the complicated and sometimes ambiguous nature of international tax laws. For instance, a loophole might involve shifting profits to a subsidiary in a tax haven, thus reducing the overall tax burden. These loopholes are often the result of differences in tax rules between countries. They are complex, and understanding them requires a high level of financial acumen. But for those who can afford the best tax lawyers and accountants, exploiting these loopholes can result in significant savings. To sum it up, tax havens and legal loopholes provide a way for the super rich to protect their wealth and minimize their tax obligations. They take advantage of differing tax laws and regulations across the globe, sheltering their fortunes in beautiful, exotic locations that offer low or zero tax rates. So if you're ever lucky enough to amass a fortune, remember these exotic locales aren't just for breathtaking vacations. They could also be your ticket to lower taxes. Tax havens, the ultimate paradise for the super rich. Ever wondered why the super rich have an army of accountants and tax lawyers? Well, let's delve into that. The world of taxes is a labyrinth, a maze filled with complex laws, regulations, and loopholes that can make anyone's head spin. Now imagine being at the top of the financial food chain, where every decision could mean millions of dollars gained or lost. That's where tax lawyers and accountants come into play. These professionals are the guides in this labyrinth, the ones who help the super rich navigate through the intricacies of tax laws. They understand the jargon, the regulations, and the ever-changing laws that govern how taxes work. They are the ones who can look at a tax code and see opportunities, the loopholes that can be used to reduce tax liability. They're not just number crunchers or legal advisors, they're strategists, instrumental in crafting tax avoidance strategies. They use their knowledge and expertise to find ways to minimize tax liability while staying within the bounds of the law. They help structure investments, set up trust funds, and manage offshore accounts, all in a bid to ensure their clients pay the least amount of tax possible. It's like a game of chess, where the moves are calculated and strategized, with the aim of keeping as much of the wealth as possible. These professionals are the chess masters, the ones who understand the game and know how to play it to their clients' advantage. But it's not just about avoiding taxes, it's also about protecting their clients' assets, ensuring they are safe from lawsuits and other financial risks. They ensure that the wealth accumulated is not just maintained but also grows, all while navigating the treacherous waters of tax laws. So the next time you wonder why the super rich have a battalion of accountants and tax lawyers, remember this. They are the unsung heroes in the world of the super rich, the ones who help them stay rich. They are the ones who turn the complex world of taxes into a playground for the super rich, where every move is a calculated strategy. Tax lawyers and accountants, the unsung heroes in the world of the super rich. So, how do the super rich manage to keep their tax payments to a minimum? Let's recap. They utilize offshore accounts, stashing money in far-off places where tax laws are more lenient. They set up shell companies and trust funds, creating intricate networks of businesses and assets that help to obscure their true wealth. These entities often exist in tax havens, countries with low or zero tax rates and strict privacy laws. But these strategies are not executed alone. The super rich employ a team of savvy tax lawyers and accountants. These professionals are well versed in the complex world of tax law and use their expertise to navigate the labyrinth of loopholes and deductions, ensuring their clients pay the bare minimum in taxes. These are the secret tactics that allow the super rich to hold on to their wealth while paying minimal taxes. Knowledge is power. And understanding these tactics can open the door to informed discussions about wealth and taxes.